I'm Dan Fitzpatrick at RealMoney.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just writing down the tickers you see on TV every night and punching the buy button the next morning. I can help you know when to buy these 3 stocks I saw on TV. Today, let's look at Emerson Electric, Novelis, and Mark West Energy Partners. Okay, we're going to start with Emerson here. We look at the weekly chart. Actually, this is a 3-day chart. There's your weekly chart. Frankly, it doesn't look a whole lot different. The stock looks like it's right up against resistance. You can see this downtrending resistance there. This is not the time you want to buy the stock, right? Kramer had the CEO of the company on Mad Money last night, and he thinks it's a buy. So I'm looking at this, don't want to do it, right? Well, hang on just a sec, Horseshack. Let's get to the daily chart. Now I get a better sense of this. Here's why. Stock was dealing with resistance right there. Support right there. We get a big volume spike down and a retracement like we saw in just about every other stock in early October. Now, where is Emerson? Well, we've actually got good solid support here right at the 50-day moving average. This has been a really sloppy stock, so I can't actually say the 50-day moving average has been particularly relevant other than just to define, well, the average price over the last 50 days. But now it looks like we're getting some kind of relevancy here, and this is what I mean. Look, stock bottomed at, we'll call it $45. Traded higher in a big way during the day yesterday. It's just really brutal trading. So what are we going to do? I think you can go ahead and buy this stock right now as long as you keep a stop just below that level, if below this support level, because if Emerson falls back into where your stop is triggered, it's probably because the breakout was a fake out and this base building is going to continue, and there's no sense hanging on to the stock while it's doing that. Kramer also talked to the Novelis CEO last night. It was like CEO Tuesday. Okay, here, 200-day moving average is really relevant. We got support right here and right here. Then we got resistance here. Didn't quite make it here, but you get the point. Finally, we're back up above it. So this is a real battleground here. But here's where I have a little bit of problem with this stock. We had a big move up here last week, right? Big spike up, and since that time it's been correcting. Not in a big way, but in a way. And so what I want you to do is wait here. I don't think you just got to go rush and buy this. I know it'll be up a little bit because that's what happens to stocks after Jim talks about them. But look, I think we got a little more downside to come here, simply as a function of the rubber band. Really stretched to the downside, wham, big stretch to the upside. I think you're probably going to get a little bit more, a little bit more of a pullback to support. But here's the deal too. You can buy this thing in scales. If you really feel like it's come down as much as it's going to come down, then go ahead and take a little bit of stock as a part of your plan. But what you also want to do is, as another part of that plan, have some capital ready to buy Novelis if it falls back to a more reasonable buy point. I'd say, 31, something like that. And Kramer also chatted with the CEO of Mark West Energy last night, yet another stock that he likes. Look, weekly chart. This is actually a pretty nice setup here. The question you got to ask yourself here is, after this kind of move, is this going to be a top that's ultimately going to resolve to the downside, or is this really just like a high base, a stock that's going to churn around here for a while and then break out to the upside and continue that trend? Well, as I look at it here on the weekly chart, I kind of get the sense that maybe it's a high base. Look at the Bollinger Bands. They're squeezing. There's your support. There's resistance. We can draw this a bunch of different ways, but this works for me. And the stock's now pushing out the upper band on a little bit of a pullback. But I don't think, you're in danger of missing the move here. Once again, I think you got enough volatility in this stock to where you don't have to go rush and buy a whole bunch of it right now. Now, if it suddenly breaks above this level here, then you probably do want to go ahead and buy a bunch of stock. But I think you'll probably be able to get it a little bit deeper into the mid 40s or so, even like 47. Shoot, even 48 is better than 49, 44. Bottom line is just try to play the percentages. Moving averages mean something. The closer you can buy a stock to a moving average, the safer it is to buy. Why? Well, because you know you're not buying it at an extreme level, because extremes aren't close to moving averages. If you haven't done it already, go do it now. Get over to Real Money Pro and subscribe, okay? It's a new service. It's an awesome service. Lots of good trading ideas. Some of the best are in my articles, Fitbits. 5 charts in each article, 4 articles a week. What's that amount to? You do the math. It's about 80 charts a month. You've got to be able to find a good trade in there somewhere. So get over there and check that out. Also, go over to my website, that's stockmarketmentor.com. Sign up for my email list. It's totally free, and I will send you 1 video a day with a charting idea that's designed to do 2 things. First of all, teach you how to fish for yourself. Second of all, maybe toss a fish on your hook every once in a while. Okay, I'm Dan Fitzpatrick, and I'll see you next time.